kind of talk about like just the housing market in general, right? So you got a pretty good finger on the pulse, I would imagine, Eric, of the housing market out there. I mean, it's basically your bread and butter. It's how you make money, right? I just pulled a couple of like statistics really quickly off of some of the stuff that's happening. Obviously, we're filming in the day and age of COVID-19, so that's having the most dramatic impact on pretty much every aspect of the economy right now. The statistics I pulled were things like, right now we're at a 11.1% unemployment rate, and that was the Bureau of Labor Statistics. That was as of this last number that they reported. And we're filming mid July, so obviously there's some updates to come yet. But mortgage delinquency rate is at 7.76% in May, and I haven't seen the June number yet, but I've heard that it's a little worse. I also have some other statistics that look at like individual mortgage rate delinquencies are up. Even commercial delinquencies are up inside of mortgage-backed securities. So I think CNBC's number was in May, it was like 1.46% of commercial mortgages were delinquent 90 plus days. Now we're looking at like 3.59%. So that number's more than doubled over the last month, or since the end of last month. So yeah, I mean, it's it's a rough environment. I mean, when you look back, obviously our last thing to call attention to was the subprime crisis, right? So 07, 08. I found what was really interesting was for single family homes, the delinquency rate didn't cap out until into 2010. I mean, the stock market's already recovering for a couple of years in 2010, but single family delinquencies capped out at like almost 11 or like 11.5%. I think I pulled that from the St. Louis Fed. So right now, what are we looking at mortgage market, or not just mortgage market wise, but real estate market wise? I mean, what have you seen over in Ohio as far as, delinquencies or even, I think, the coming wave of foreclosures and kind of tenants getting kicked out? Have you seen that on the horizon?
Well, we've thought about it being on the horizon since, I think, was it March 13th or 14th when they announced the COVID. So, those were the first thoughts among the investor groups, was like, oh no, nobody's going to pay their rent.
Right.
Yeah, government's going to step in and tell them they don't have to pay their rent. And,
yeah,
we're all in trouble. That and a lot of the commercial investors, they put the brakes on, and till this day, they're still not doing anything because they want to ride this out and see what's going to happen. They've subsidized employment paychecks, and they've subsidized the mortgages. They've furloughed those so people don't have to pay them. Right. So I don't know if that's in that statistic or not, if those delinquencies include the ones that are taking the forbearance and they're going to wait and pay their mortgages later or not.
Yeah.
I don't know how accurate that number is. I think that in general, just because we're in America, that when people put off those payments, there's going to be a gluttony of opportunity with foreclosures coming up, because they're not going to pay them. They're not going to catch up. They're going to get so far behind, they're going to stick their heads in the sand.
Right.
So I think that's whatever percentage that is. Personally, I think the opportunity is going to be greater than it was in 08 when everything was crashing. I think there's going to be more opportunity to purchase those from an investment standpoint. Unemployment, that's anyone's guess. We're coming into an election year. It's being propped up right now. It's trending downward, which is good. I think we've seen a good drop. 3% it's dropped here in the last month or so.
Yeah, it was a little bit of a bounce, right?
We were down what, in the low threes though. Are we going to get there? That's all hinging on what they do with COVID moving forward. And, what impact is it going to have on the businesses as far as their bottom line?
Right.
Paying for all the extra effort that's going into making the same cup of coffee. I don't know. Those are things that are over my pay grade. I don't know what effect that's going to have, but it's going to have an effect.
Yeah.
Retail is just taking a beating. The
yeah.
smaller businesses are just going under. and I don't see a lot of them making it. So, what?
I think there's this general concern that, and I'll link this in the comments below, but there's this general concern, and I think even like a couple of the celebrity news personalities out there have started talking about this stuff. Like I don't know if you ever have heard of the Patriot Act with Hassan Minhaj, or I mean, it's in that vein of like the Daily Show and Last Week Tonight and stuff like that. But kind of separating the politics from that conversation, they've highlighted this idea that evictions could have a huge backlog, right? Because like you said, we furloughed payments, but we didn't exactly furlough the full bill being due, right? Like so, certain payments are still going to be due even if you stretch them over time, or maybe they all come due all at once, right? But so they've talked about this idea of larger businesses and larger investment entities, like private equity is the big one, right? That's the big bad monster that a lot of folks that are worried about, kind of mainstream America talk about. I mean, do you see them coming in and swooping up a huge portion of the private property that's out there in the United States? I mean, is that something that you'll have to go toe to toe with them, right, from the investment side?
Yeah, and we won't win those. We'll just get the scraps that fall off. I
Yeah.
mean, if they're buying 200, 300 properties at a time, we can't compete with that.
Right. Yeah.
You
I
know,
mean, yours are mostly what, one-off purchases?
yes.
Okay. Yeah.
Our focus is short sale. So we do a lot of short sales. We do some bank own, some auction stuff, but short sale, that's the person's in trouble, and we put it in a headlock, and sometimes it takes a month and sometimes it takes a year
Yeah.
to get it resolved and purchase the property.
Yeah. What are your thoughts, Alan? I mean, what are your impressions on that stuff? I mean, obviously it gets hyper politicized, but
Yeah, well, I mean, just look in New Jersey, I see the issue being one with all the money being borrowed to pay for what's happening. Taxes are going to go through the roof, which is going to make buying a house in New Jersey harder. And I don't know if Erick's running into this too, but like the story I was telling about with the air conditioning, lending in New Jersey is going to be a massive headache. I don't know how many banks are going to be willing to front money to people who are just getting back to work. I mean, we still have one of the higher unemployment rates in the country currently, and it's not getting better. Now that they're talking about shutting everything back down, we're still stuck in phase 2 of our reopening, and with a to be determined timeline attached to it. So I think around here it's going to boil down to who has money and what banks are willing to lend money.
yeah, I think that's an interesting point. I mean, like we're right next door to New York City, and even New York City's starting to feel it, which is strange because like after 07, 08, the market in New York City dipped along with the rest of the national market, but then I think one of the only like two of the fastest to recover zip codes in the entire country were basically Manhattan and Washington D.C., right? So they took a dip and then they came right back up after that. I'm not sure if I see that happening this next go around. I think New York City's going to have some issues. To your point, Alan, like the tax base. And this is a disclaimer. Anyone who watches this, like we're not economists, we're not we're not financial advisors or anything. So we're not telling you what to do with your money. Obviously contact someone who's licensed and stuff like that when it comes to it. But when it comes to the real estate market in say like New York City or another metro area, I'd be really concerned because they have some huge tax revenue gaps, right? So what's your choice? Your choice is cut essential services, okay, which makes the area look less attractive, okay? And the second is to raise taxes on the people who stick around. So you're in danger of causing like, a flight of population from those areas too. So, I mean, are tons of people, Erick, are tons of people like moving to Ohio in your area, or have you experienced a flight from Ohio?
Well, Ohio's been in a steady decline for probably 25 years.
All right.
It's been, a fraction of a percent. It's very slow. Now there's hot pockets in Cleveland where the millennials want to live, want to move to. So there are some small pockets where the population's increased. And there's pockets where I invest in where they just stay even keel. So, it's a safe enough investment, but the market's not going to drive the pricing up very quickly.
Yeah. No, I think that's going to be a common theme. I think a lot of metro areas are going to end up running into that problem, or even a lot of states in general. And there'll only be a couple of states where I mean, Alan and I have talked about it. The flight from New Jersey to like Texas has been huge. It's been absolutely huge. Tons of people moving to Florida, obviously. I mean, that's been a constant over time just because of the tax treatment and the snowbirds and things like that. But that's going to be something to watch. Like I wonder if this is kind of like the final straw, so to speak, or like that last snowflake that causes the avalanche in some of these areas. I think we just have to kind of like hold our breath and wait to see what happens from that standpoint. But is your thought that there's going to be some really big financial opportunity as a result of this?
When it comes to New York, I'm not sure. I think you got to look at the political scene there too, and that you want the rioting to stop and you want the area to clean up a little bit and maybe regroup. But I think potentially there could be a lot more opportunity in an area like that if the housing prices are driven down temporarily.
Mm-hmm.
What about your neck of the woods?
In my neck of the woods?
Yeah.
I think, our pricing's been driven up because of supply. So the demand right now is outpacing the supply, I think is a large reason why that's been driven up. I think some of that is COVID related, but some of it was set in motion before COVID. So I'm not sure, where do you draw the line on how much of that is COVID based? I don't know.
Yeah.
I think we're going to do pretty good at least through November, and after the election, who knows? We'll see if there's a change of government.
Yeah, that always affects the market.
All these give me's and when we're going to be able to get control of COVID, I think it could sling this real estate market either which way. Really good, or we could be in trouble.
Well, I think I'd imagine you follow interest rates, right? I mean, so like, what was the number I saw the other day? Like, mortgage interest rate in a lot of these kind of like standard loans is what, sub 3%? Is that right?
Around 3. Mm-hmm.
Wow, that's incredible. That's absolutely incredible. I mean, it's like, but to Alan's point, if you can't prove income, like over the last 3 months, right? I doubt they'll take an unemployment pay stub, right, as proof of income. How's anyone going to qualify, right?
Yeah, having a job is
yeah.
I don't think they've dropped that from the underwriting criteria yet, but
they did in 2007. maybe the solution is the problem, or the problem is the solution. I don't know.
Well, that was the same thing with the subprime lending for auto purchases, where they were giving money to anybody who could come in and prove that they had anything in their bank account.
Yeah. Yeah, no. What's funny is this is aside from real estate, but I have one of the easiest lease transactions I've ever had in my entire life. I with the backlog, like you're the inverse of what you're talking about, Eric. Like the supply is massive. I mean, here in New Jersey, we sit right on basically an ocean where there are lots just filled with import cars coming in from overseas, and they're bursting at the seams because just moving that volume off the auto lots, even if they were able to be open, I think everyone's playing wait and see. Like, what's it going to look like? Am I actually going to be able to have $300 a month or $200 a month to pay my car payment, right? But yeah, that lease transaction was pretty simple. I mean, like, I asked about like the credit underwriting and everything like that, and the guy's like, "We had a lease with us before. Have you missed a payment?" I said, "No." He said, I'll get it done." I was like, "Wow, that's impressive." He didn't even ask me if I was still employed. But I think that's kind of that's a good point. We're kind of waiting and holding our breath for whatever the end of this thing looks like, right? And then what the political landscape looks like after November. I mean, like anyone's bet is potentially correct on that one. Who
Mhm.
knows at this point, right? So yeah, I mean, what are you looking? Are you just kind of playing wait and see right now, Eric, or are you kind of like looking to deploy assets in certain areas?
I'm buying whatever I can get my hands on that makes sense.
Okay.
The flipping is still fine. I just purchased a single family that I was actually considering flipping, but the house wasn't that bad. It was almost in rent ready condition other than some cleanup. So I moved that over to the rental portfolio, and I'm going to hang on to that. I bought it right so I could sell it at any time, even if things go downward.
Mhm.
What's that mix look like? Like the like of every, most years when you do, pick up property, is it like 50-50 in terms of what you're flipping versus what you're holding on to for cash flow, or what?
No, this actually, when we hit the slowdown, I ended up selling a couple of the rentals, and it was more because I couldn't find properties to rehab. So, and I had troubled tenants. So I'm like, oh, this is a real simple decision. This
Yeah.
house is a headache. This house is a headache. We're fixing them up and selling them. It wasn't rocket science, but I would say probably one out of every 5 or 6 houses I end up keeping as a rental property.
Okay.
I might try to get more aggressive and say, okay, I want to rehab. Back in '08 when things were horrible, I would rehab 3 and cash out enough to buy one straight out. That was the only time I ever got away with that. Right now, I couldn't possibly profit enough to do that, but
Yeah.
at least I don't think I could.
Yeah.
I will try, but it just won't happen.
What are you anticipating as far as, any of the properties that you pick up in the future, for strictly for rental? I mean, what are you anticipating in terms of the trend as far as being able to find people to actually get in there and pay the rent every month?
That's guesswork again. One thing we did do when notification of COVID came out is we reached out to all our tenants and we let them know, hey, we're in this together. Whatever's happening moving forward, we all have to go through this. If you're in financial trouble, communicate with us. Let's try to find a way to make this happen. And I'm collecting all my rent. That's 21 houses. So, and everybody's, that doesn't mean everybody's not in hard times, but I think keeping the communication open, letting them know you're human too helps a little bit. You won't be the first bill they don't pay.
Yeah. That's a good point. Like that human aspect of things. I think a lot of people, I mean, do you feel this way, Alan? Like a lot of people perceive property owners or people that own and rent or own and flip property, like real estate people, they perceive them like they're the devil, right? Like, wouldn't you
Yeah, I mean,
say that like that's?
I think it's all situation based and who you're actually renting from.
Yeah.
Because in my life I've had 4 landlords. One of which I was paying rent on this house before I bought it. He was great. If I had a problem, if I was going to be late with a rent payment, if I just gave him a quick text saying, "Hey, listen, my check didn't clear yet. Give me an extra day." Yeah, okay, fine. I've had other landlords that if they didn't get it that day, he was at my door the next day knocking, wondering where the rent check was, or if something broke, good luck getting it fixed.
Yeah.
So
Yeah.
I mean, I think it more just depends on the actual landlord than the situation itself.
Yeah. I think that's I think again, I could have like a one-sided kind of view based off of what I'm seeing or being subjected to, but most of the real estate people that I come across are like you, Eric. They're really interested in the people that are renting, because look, there's a cost associated with turning over an apartment or a house, right? Like you don't want that unit to sit there unrented if there's something that you could do to, not necessarily help out, but like, be understanding of the people that are in there and keep them in there long term, right? Like that's the most profitable relationship, is that long term type of setup. But so much of what's portrayed in, whether it's the media or, other blog and news articles that put out there, they talk about people who rent and own real estate like they're, like they have no conscience, right? Like they're just kicking families of 4 out on the street willy-nilly, like it doesn't matter.
In today's journalism, if you can even really call it journalism anymore, but in the media, they don't report on the good news.
Yeah.
There's no clicks in good news. There's clicks in bad news. There's clicks in jerks treating other people terribly. I mean, that's so, it's become what puts eyeballs on your website.
Yeah. Yeah. No, that's a good point. I think it's we won't get too political on this one. And Eric, I think I know you're I think I know you're leaning, so I won't get your dander up, so to speak. But I definitely think that there's when it comes to whatever it is, real estate or the pandemic or whatever the flavor of the week is, or the flavor of the 15 minutes with the news cycle that we have now is, I think like the loudest, like the extremists are the ones that have the biggest bullhorn, and that's what you hear the most of. And if you're not careful, you end up assuming that everyone else sees the way they see, when truthfully they're probably in the minority. They're just the loudest, right? Like, it's the one person in the group of quiet people who's yelling something and then assuming that everyone else is complicit. I don't think that's the case. But yeah, I think real estate people get in some venues get a bad rap, right? Like, what was it that I always come back to movies. Did you ever see the movie The Super, Eric?
It doesn't ring a bell.
With Joe Pesci? Alan, did you ever see The Super?
Yeah, of course. Yeah.
Yeah, like
he's forced to live in one of his slumlord apartment buildings.
Yes, yeah. And what's crazy is, like, I think a lot of people looked at that. They were like, "Oh my God, my landlord owns like X number of buildings. At least a couple of the properties must be like this. Like that kind of thing." I think it's I think it's a misnomer. Like, the majority of people that own and rent real estate, yeah, they're doing it for profit, but they're doing it to also provide lodging for people, right? Like, because if you didn't provide a good service or a good product, they wouldn't be there at the door.
Mm-hmm.
So, all right. So, one thing I always ask everyone when I kind of like do an interview or something, and Alan, you can ask a follow-up if you want to, kind of a more humanizing question. I always ask what you're like reading or what you're kind of looking into from a professional or personal development standpoint. I don't know if you're a book reader or more movies, or I mean, what's your vice or your interest recently in terms of development goes?
Well, my latest development is I just signed up for a commercial real estate course, and so I've got to get through that. I went through an introductory one, and I bought the follow-up course because ultimately I'm going to be purchasing apartment complexes, and I'll probably trade in my house chips for down payments and things as I get that momentum moving forward. So I'm trying to educate myself a little bit more in that arena. That's
awesome. Yeah, no, that's a big step up in magnitude, right?
It's the same thing, just more of it. As I told my family, I don't need bigger headaches. I need bigger projects to go with those big headaches. So, you just want the extra cash flow that goes with it.
Yeah. No, that's awesome. What are you working on, Alan? You got anything that you got in the works?
Yeah, well, I'm still working on that risk management course and I'm working on all these various state requirements for licenses, and it's just been it's been interesting to say the least, because some states get back to you right away with your information requests, and some of them it's like they have no idea what they do. You ask them, hey, what is your requirement for what?
Yeah.
This is the Department of Insurance, right?
Yeah. What was it? It was just Georgia you signed up for, and what? It was a paper application you had to mail in, right?
No, it was a paper application I had to get notarized, and then I had to scan it and email it back. And I actually just spoke to them this morning, and they said they never got it. And I said, but I got confirmation you did. It goes, oh, that's just an automated thing that goes out with any email. I'm like, what? So I sent this to you like 2 weeks ago, and you're just realizing that maybe you didn't get it because the automated message said you did?
Yeah.
So I'm still waiting on that one, and I'm working with Texas and some other states trying to get them lined up.
Yeah. Well, we're gonna have to get you out in Ohio. Apparently, I don't know. Eric might not have some work for you, but I know he probably has a couple of people that do.
I'll come out there. I'll come out there and just stand on job sites, pointing and yelling at people.
Yeah.
I've done it before. I can do it again.
All right. Well, Eric, I know your time's precious. I appreciate it. Thank
Yes.
you very much for participating in this. Any closing sentiments?
No, people got to live somewhere. Take care of them, you know.
That's true. That's true. So anyone who is in the east of Cleveland area and looking for housing, hopefully you happen across, can they look up, like, do you have a website that lists your locations that are open for rent?
I actually I outsource it to a property management firm.
Okay.
They can always message us through elinvestmentgroup.com. And, you know, that's what a lot of my contacts do. They call me first anyways to see if I have anything for rent. And then I forward the lead. That's usually how that goes.
Awesome. And I didn't ask you, you're an investment group of one, or do you also have opportunities for people to kind of like buy into the operation?
We take outside capital. So I use my own capital, and then we have private investors, and then we use some institutional cash now and again, you know, with the PPP loans, you know.
Yep. Okay. So and is that information also available? So what was it? elinvestmentgroup.com?
They can put an inquiry in, and they can give them their information, and then we can interview and see if we're a fit.
Awesome.
elinvestmentgroup.com.
Okay.
Awesome. All right, cool. Any other closing remarks, Alan?
Oh no. I'm good. This has been fun for the first one.
So everyone knows, I don't know if this is going to make it into the video cut, but this is like Alan's first like official Treadstone recording for YouTube. So don't judge him too much.
Get used to this beauty, because you will see it everywhere.
Yeah, look at Eric flexing on camera.
First one flexing, yeah.
So, all right. Thank you, Eric. I appreciate it. Alan, stay cool. We'll have to do this again sometime in the future.
Yes.
All right. Thanks, guys.
Thanks.